I was going to talk a little bit about mortgages. It's kind of mortgage season, right? If you've ever bought or sold a home, it was probably between March and June. That's just when doctors tend to buy homes, whether you're in residency or not in residency. And I'm not going to get into the fact that I think most residents ought to at least consider renting their homes. The truth is, most of you aren't going to, no matter what I tell you. So let's be smart, whether you're a resident or you're an attending, about how you pay for that home. Okay. There are mortgages out there called doctor mortgages or physician mortgages. And the point of these mortgages is that, they trust you a little more than a typical person because of your high, stable income. So you can kind of get a pretty sweet deal on a mortgage. It's not necessarily lower interest rate and lower fees, but without putting 20% down, you can get out of paying the insurance that protects the lender from you defaulting. Okay? This is just a cost to most people when they buy a home and don't put 20% down. For you, if you get a physician mortgage or a doctor mortgage, and it's available to a few other professions as well, you don't have to pay that insurance. So that's the benefit. You can also close without actually having pay stubs. You can just have an employment contract. And a lot of times, even just an independent contractor kind of contract is enough for you to close on that home. Now, a lot of times it makes sense to make sure you like the job and the job likes you before you buy a home. And that might take 6 months or 12 months after you move there, and that's okay. It's okay to move to a new city and rent for a while. When we moved to Salt Lake, we rented for about 6 months. And so we knew exactly what homes were worth. We'd looked at every home for sale in a 2-mile radius area, the place we were interested in living. We knew what they were worth more than the people selling the homes, more than our realtor, knew what they were worth. It just gave us a lot of time. Yeah, we could be patient and we could be, a little bit strategic about what home we bought and how much we paid for it. And because of that, we got a pretty darn good deal on a house we're still very happy with 15 years later. So don't be in a rush that you feel like you got to fly in 3 days, buy a house. You don't have to do that. You can rent. You don't have to rent an apartment. You can rent a house. There's houses for rent just about everywhere you want to go. You can rent a house for 6 months or a year. Even if you got to pay a little bit more for it because it's a month-to-month contract so you can get out of it in 6 months. But make sure the job's going to work out. Make sure you have a stable family situation, a stable professional situation, because you need to be in a home 3 to 5 plus years to work out well for you financially. You need it to appreciate enough to cover the transaction costs. And that takes time, right? I mean, some home prices have gone nuts in the last few years, and it hasn't required that much time for it to appreciate enough to cover the transaction costs. But traditionally, on average, over the decades, it typically takes 3 to 5 years for that to happen. So be very careful out there buying homes that you think you're going to be in less than that time period, and make sure it's highly likely that you're going to be there for that sort of a time period for it to work out well financially. Now, we've got a list of not only physician, but regular mortgage lenders you can find at whitecoatinvestor.com. Just go to the recommended tab and you'll see it there. And they can help you see what's available in your state where you're buying and get the best deal you can on a mortgage. Remember, though, you are dating the mortgage, right? You're marrying the house, you're dating the mortgage. If rates go down, you can refinance that mortgage in a year or 2 or 5 and hopefully get a lower interest rate than the initial one you purchased it with. Even this home that we moved into in 2010, we refinanced it twice and got lower interest rates before we paid it off. We paid it off after 7 or 8 years in the house, but we refinanced it twice before then. You marry the house, you date the mortgage.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.